Okay, good morning, folks, and welcome to a quick morning update. We're going to review the pre-market activity, then we'll segue into members' stock chart request, and then members, what we're going to do, since I didn't do a market wrap last night, I wanted to wait to see how the pre-market activity unfolded, how Asia opened, and how Europe opened, and how they responded to our very volatile markets yesterday. So we're going to segue into a special members morning update immediately following a review of the pre-market activity and your members stock chart request. So let's begin, not with a chart, but with a review of CNBC.com and some observations. And this is not necessarily a finger pointing towards CNBC, but I'm going to use them as a platform since I visit the site so much. Now, I have been discussing with members all week long the negative economic data that has unfolded, none of which has appeared in the headlines on CNBC. And if it has, it's been down here, certainly not above the fold on their website. All you've seen is multiple headlines about Tuesday's congressional testimony by Fed Chair Powell and how hawkish he was. And for the life of me, all week long, I was scratching my head. I'm saying, Jesus Christ, don't they see the economic data that is unfolding here? Don't they understand that this projection of a fourth rate hike is kind of pie in the sky, given the fact that the economy is slowing down? What don't they get, or what don't I get? And I shared this frustration with members all week long, and we held out on taking some dollar-sensitive positions off the table, such as the gold miners, which trade inversely of the U.S. dollar, because I was suspect of the fact that they were simply ignoring all the negative economic data and Fed Chair Powell's statement, I think, was just taken out of context. Now, when you take a look after he testified again yesterday on CNBC.com, as it stands right now, at current, it is 5:24 in the a.m. Eastern Standard Time. There is not a one darn headline about Fed Chair Powell. I'm going to scroll down here. This is above the fold. This is the gold area for any website. Nothing. Not a single headline about yesterday's testimony. Now, were it littered with commentary with regard to the negative economic data? I would say that the editors at CNBC, the financial news media, it's not just CNBC. What they're doing is they're trying to position the market for a rally. I can't say that yet. But the fact that we have simply zero headline with regard to Powell's testimony yesterday, and the fact that it's a known, it's a fact, that we have negative economic data this week, I think they're going to try to push for a rally despite the fact, and this is a bold statement, right? We had very, very negative price action in the major averages yesterday, and this morning the futures are down. Let's get to it. So when you take a look at the VIX, we're elevated this morning. These are all 4-hour charts I'll be going over. We're elevated. So to say that the markets are getting prepared for a rally is a bold statement on my part. I want to acknowledge that. And I could be wrong. It's purely speculation. But I'll be going over with members some charts that lead me to believe that while the charts look very bearish on a weekly basis, on a daily basis, we may just get a pop higher and a retest of the breakdown points. I speak frequently with regards to breakout points and a retest of the breakout point. What we'll be doing is talking today with members about the retest of a breakdown point, meaning we rally back, we try to recapture prior support, it now acts as resistance. That makes for a good risk-reward entry point to the short side. So members, more to come on this morning's morning update in a moment. The VIX, we are up this morning with a 20 handle, looking strong. So we have fear in the market. The S&P 500, it broke down yesterday below a key support level, but we have support below. Let's take a look at the dollar. Again, these are all 4-hour charts. The dollar is behaving poorly. Do I think that the rally in the dollar is over? I think that in all probability, yes, it is over. But we're not going to rest on that. What I want to see is the dollar at a bare minimum close down with an 80 handle on the Dixie. Right now, we're still trading up above 90, which is a psychological level. And then I have support levels below, which will dictate when we add to our commodity trades. Now, speaking of commodities, I have been warning that inflation is in this marketplace. How do we know that? Well, we know by industrial metals, we know by precious metals that they have been rising despite the fact that they had a weak February. But what nobody else was talking about was agriculture. I not only talked about it, we bought it. We're long. And take a look at corn, ripping higher. Take a look at soybeans, ripping higher. Oats, they ripped higher yesterday. So what's going on here, folks? Look no further than the tips. We have a weak dollar. We have rising tips. Take a look at oil, fairly weak. Now I'm going to put the logic of as to what I believe is going on together, and we will revise our trade thesis, which is not going to be a big revision, honestly. It's consistent with our thesis. But yesterday's tariffs, which we expected on steel and aluminum, that will require us to update our thesis a little bit. Now, as for gold, it had a weak day yesterday. It really threw me for a loop because you had your gold mining names, which rallied. And while we were flashing bottoming tails here, which is great, you know, just because we're down on a session, meaning this 4-hour session, this 4-hour session, they were down sessions, but you had bottoming action, which told us we have support below. Now, would I go stepping in and buying gold on this rally after hours and into this morning? Nope. Will I be looking to buy gold, silver? Yep, but not right now. And we'll talk about when I plan on adding to our precious metal positions, whether it be the metal itself or the miners, on morning update. Let's go to the 5-year Treasury note. We're about flat, but this is a bullish chart. We're pressing into the upper band of the Bollingers. So you have your Bollingers, which are beginning to hook back up again. Have we broken out? We have broken out. So what does this mean? It means that for all the chatter this past week regarding how hawkish Fed Chair Powell is, yields are down. All right, so thank you, financial news media, for your fantastic reporting of how hawkish our Fed chairman is, because yields are down on the week. So if you traded off of these headlines, or now the lack thereof, you would have gotten burned. Join the Contrarian Trader. Get the real straight talk on what's going on in this market. I don't know it all, but I could tell you when it's time to call BS on the financial news media, because this past week, for a perfect example, they had every reason to report economic data was weak and why Fed Chair Powell should remain neutral on raising rates until we see how strong this economy is. They didn't. They chose to jawbone the market lower. The question is, why? Will they be putting on net long positions in anticipation of a Federal Reserve that is going to have to pause on rates? We're not quite sure yet, but the charts will tell us. That I can assure you. What it's also assuring us of, meaning the charts, is that we have inflation. There's no doubt about it. Look no further than the tips. They broke out yesterday as well. Let's get to member stock chart requests. Members, we'll discuss trade strategy on morning update. Okay, folks, let's begin member stock chart request off with U.S. Steel. Yesterday, a big event occurred. It's been a while since we've heard about tariffs. President Trump did issue tariffs, 25% on steel, 10% on aluminum. How did the stocks respond? The shares on the week are up almost 6%. They're off the highs of the week. We expected this. I've been speaking about the imposition of tariffs for a while now, and we finally got that news event. Now, is it time to buy U.S. Steel? Really, it all depends upon how this market plans on going. On a weekly basis, we have broken out. We're holding the breakout. I would love to see a pullback and a retest here. Do we get a sell the news event? That's the big question mark. And if the market continues lower here, I think that in all probability, we will get that retest. Now, we did a pullback yesterday, and we did rally off the lows of the day. So we did not see a huge net price movement. What do I mean by that? Well, net meaning we didn't close at the highs of the day on this bullish news. That leaves open the door, since there were willing sellers up here, to see more sellers move in and to retest support. So would I go buying now? Listen, if you get a new daily high, sure, scratch the itch, put on a small position, but be prepared for a pullback at any time to retest support. If we break down below, I would say 41.50. Look, I would stop out of that trade. Longer term, I think that these shares are moving higher. Volume outstanding yesterday. So U.S. Steel, I see right now as a stock that should be considered a long and carefully accumulated. ATVI, Activision Blizzard. I mentioned the other day that I liked Activision Blizzard. I thought it would move higher. It did move higher. Did I trade it? No. I don't want to buy a darn thing right now. All I want to do is manage my risk. So no, I didn't go buying Activision. Would I buy it right now? Listen, again, it all comes down to how the market reacts. Do we put in lower lows? Because remember, 80 to 85% of all stocks will trade with the overall market. So what's your probability of making money to the long side if the markets are selling off? It's not all that high. It could be the greatest stock in the world. And for new traders out there, you may be saying, that doesn't make sense. A great stock, strong earnings, strong revenues, etc. You need to remember that while that story on an individual stock is all well and good, you need to remember that there are a massive number of traders out there with big leveraged positions just waiting for a margin call to come. And when that margin call comes, if they're already trading on a credit card, that means they probably have no cash in the bank to cover that margin call. That means forced liquidation. And in all probability, they'll sell their winners first. It's human nature, and they'll let the losers continue to lose money. It was like that when I got here, right? It's just the way it is. So Activision Blizzard could be the greatest stock on the face of the earth. We could have a bunch of analysts with a strike price on it, a target price of $150 by next month. Folks, when the market goes down and margin calls go out, everything tends to go down. Apache. The last time we spoke about Apache, I said expect a breakdown here. Expect a quick rally and then expect a breakdown. We have now broken down. Apache is a short all day long. Now, when would I short it? Well, I spoke earlier about retesting a breakdown point. So far this month, that's exactly what we've done. We broke down in the month of February, down below support. We have since rallied back on March the 1st in an attempt. What was the high of the day? 34.27. The breakdown point is around $35 per share. We use this price point here for the purposes of drawing a support level. What was the low? 34.89. So I'll revise my breakdown point to 34.89, and we fell less than 20 cents below that level. So for all intents and purposes, we retested the breakdown point yesterday. I would look to short Apache on a new monthly low, and I would stop out on a close back above this support level here at 34.89. And I would add to that position on new lower lows after we rally back, put in lower highs. You know the deal. It's a stair-step formation, but just the opposite direction. Just like this stair-step formation should have been bought on the breakout, You want to short into a rally up and into this upper band of resistance. RSI breaking down. I pointed out the last time we spoke about Apache, we had a double top. We had broken down below the lower band of support back in August. Folks, August, the market was sending us signals back in August that Apache was broken. And that was before we broke down below the support level. So the monthly chart is not looking good. Daily chart, Apache, I think we'll rally back here. I would like to see a short into between 37 and 38.50 per share. I wouldn't chase it down though. Just like I wouldn't chase a stock up unless it was a strong momentum stock. I wouldn't trade this one on downside momentum. Grubhub, daily chart. I love the company. I think that the stock has held up very well during this sell-off. I think that the sell-off may begin to catch up with Grubhub. Why do I say that? Let's go to the weekly chart first. Topping tails on a weekly basis. We have one trading day left to go. Volume to the upside is declining. Lower highs and ultimate oscillator and lower lows. Now, the daily chart, we're extended beyond this breakout point. We have consolidated nicely. I wouldn't be surprised to see a breakout here, but with RSI putting in lower highs, volume to the downside rising, Stokes rolling over, I think that with the current market conditions, there's a good chance that we break. In fact, we did break yesterday, but we rallied back to recapture support. So if the markets begin to recover here and we begin to break out above 101.03, Grubhub is along because it's been showing relative strength. Now, if the markets sell off, you should expect that Grubhub is going to roll over. Haynes Celestial, weekly chart. I think that these shares are a short. We broke down below this lower band of support during the week of February the 5th. We rallied back, retested the prior support level, and it failed to recapture. Now we are rolling over yet again. So far this month, we have a bearish key reversal. I think we could short next week on a new weekly low. Because in all probability, we're going to take out 32.82 if we break down to a new weekly low next week. We'll leave off here with Amazon. Amazon was down as low as 14.65 yesterday. That was a big, big drop, right? I would love to have shorted Amazon again, but we held out and the shares rallied back to recapture prior support. Do I think that Amazon is done going down? It all goes back to the markets. If the markets roll over, eventually the strongest of the strong will succumb and Amazon will probably roll over. However, Amazon's been showing relative strength versus the S&P 500. So we want to pay a little bit of respect. We are rolling over on RSI. We're putting in a lower high. Rolling over on Stokes, but they can hook back up again, both of these. Volume was very high yesterday. MACD, lower highs, looks like we're going negative. So am I open to shorting Amazon? I've done it before. We'll do it again. We'll probably look to short it on a new break of support. As a matter of fact, we'll talk about a short of Amazon in greater detail on Morning Update. In fact, let's segue into it right now. Okay, members, let's segue into a quick morning update. I want to really talk about two charts in detail. The first one up is the 10-year yield. The second is the US dollar. Why? It's because these two charts will dictate which way this market is going. We need to boil down to its most simplest form. What is driving this market? And what is influencing our long positions? And does this sell-off in the markets have legs? Or is there about to be a massive short squeeze in the market? Now, the 10-year yield, I've been warning about the potential rollover for yields all week long. In fact, go back to last week's The Week Ahead commentary, I pointed out that these topping tails had implied that we would see a rollover here, at least in the short term. Fast forward to today, here's where we're opening up the day at current, down 2.43% on the week.